Welcome back to the channel, my fellow traders and investors. NIO stock is finally beginning to look bullish and that it could reverse higher. Last video I told you guys clearly to expect a drop lower. We got that, but now things are looking bullish both technically and fundamentally, as we'll discuss. So in this video I'm going to be breaking down its full technical analysis, price target, and my personal strategy of how I plan to be trading and investing in the stock at this point. So all I ask in return is that you subscribe so that this video can be pushed out to more traders that need a better understanding of what's going on and what to expect. And if you want to learn technical analysis for yourself and a ton of advanced trading strategies, be sure to go get my book, A Technical Trader's Handbook, on Amazon, which was the #1 hot release in public finance in the world. So be sure to go get it, and let's jump into the video. Now before we do jump into the video, I just want to shout out our pick Elastic NV that I called out a couple months ago. This is a stock that I've been calling a screaming buy since it was at $80 a share, and about a month and a half ago when it was at 150, I told you guys to buy the stock. It's the most undervalued tech stock there is, and we had a little dip, and now again it's ran up all the way to about 180. So congrats to those of you who got it. Now let's talk about NIO. Right, so jumping into the technicals on the 6-month 4-hour chart, we can see a few things right off the bat. So first of all, last video I told you guys clearly right over here how we had reached this top diagonal resistance line of this lower low and lower high channel, and to probably expect some resistance. Not only that, it looked like we were forming somewhat of a head and shoulders. We got our left shoulder, we got our head, and we got our right shoulder before the ultimate breakdown lower as predicted. But taking a look at what's happening recently, things are finally beginning to look bullish. If I go to the 1-year daily chart, we can see this a little better. As you can see, first of all, we've broken out of this top diagonal resistance line of this higher high and higher low channel. You can see it's been acting as a strong resistance level, resistance, but now we've broken above that top diagonal resistance line, showing that buyers are willing to commit to that higher price level and break above that critical resistance level that we've been having. In fact, we've now turned that top diagonal resistance line into support. You can see how we pushed up, pulled back, turned that resistance line into support, and we're continuing higher. So that's really bullish, and it's just classic technicals, right? Previous levels of resistance turn into support. So that's looking phenomenal. But apart from that, it also looks like we're beginning to form an inverse head and shoulders, right? As you can see, it looks like we got our left shoulder, we got our head, and boom, right shoulder before the ultimate breakout to the upside, right? But apart from that, on this daily chart, we can see how the red MACD line has also crossed above the green signal line. And now by being on the daily chart, what this signals is that the longer term momentum and longer term trend has shifted in favor of the bulls. So that's really bullish, along with the fact that, as we can see, during this time that we were going lower, you can see the stock was going lower, but the RSI was forming higher lows, somewhat of a bullish divergence, also signaling that the momentum shift had been taking place for a while. So that's also bullish to see. Now going back, let's go to the 1-month hourly chart, and here's where things get a little more interesting. Now, as you can see, it also looks like we're beginning to form somewhat of an ascending triangle, right? You can see we're getting tighter and tighter and tighter in this range. We have this bottom diagonal support line with this top resistance line here at about, again, 36.75. And ascending triangles, as we know, usually after downtrends tend to lead to breakouts to the upside. Now again, triangles can go either way, and I'll tell you this like I do in all my other videos, that you need to be patient and clearly wait for the breakout before you buy, because a lot of people might still buy into this, but guess what, it could easily also break down lower, right? You have to wait for the breakup to the upside before you buy into it to confirm that the trend is truly reversing. So there are multiple bullish indicators, and this makes sense. You know, last time we had our delivery numbers come out, and there was a negative reaction towards that, and we actually discussed this last video, and you can go ahead and watch it. But you know, to put it shortly, right, there's still a lot of concern about the chip shortage, the overall Evergrande situation, and overall inflation, and all these different things. But since that time, the government has reached a temporary agreement to increase the debt limit, which is always a good thing, because the US government, we don't want them to default. Then there's the Chinese risk. Now the Chinese risks are still there, and they're not going anywhere. here, but they've kind of went to the backside as people have been more worried about what's been going on in the US with the debt ceiling, with the Fed and all of that. And then not to mention, bank earnings, right? It's earnings season finally, right? So leading up to NIO's earnings, obviously now that it's so oversold, you're definitely going to see a bunch of institutions and big buyers try to buy up at these cheap levels and in regular retail investors. And not to mention, bank earnings have been strong, they've been good, they've been healthy, so that could further fuel the upside. And as always, anticipation for NIO's earnings could easily also cause further upside as buyers buy more heavily into it. So overall, things are beginning to look a little more bullish, but obviously you always got to continue monitoring the fundamentals and the technicals and wait for the key levels. So now that you get a rough understanding of the technicals, let's talk about my price target and how I exactly plan to be trading this. But before I do so, if you haven't already, be sure to go get my new book, A Technical Trader's Handbook, on Amazon that covers a ton of technical analysis strategies to help take your trade to the next level. So be sure to go get it. And now let's talk about my price target and my strategies. Now going to the 6-month 4-hour chart, even though we've broken out of this lower low and lower high channel, I still don't want to be buying just yet. And many of you guys might be wondering, hey Ishaan, why not? Well, it's because technically we're still in a downtrend. As you can see, we're still below our previous lower high, right? We can see we pushed up, came down, pushed up, and this right over here is our previous lower high. Now, as long as we're below a previous lower high, technically we're still in a downtrend. Technically, we haven't officially begun forming new highs as long as we're below this previous lower high. And this is all the stuff that I cover in the course and in the book. But once we break above this level, that's when we finally break out of the downtrend and break above that previous lower high and start technically forming higher highs and higher lows. I know that might sound a little confusing, so rewind it if you need to, but overall, as long as we're below this, technically we're still in a downtrend. So once we break above this level here at 36.75, where we've been facing very strong resistance, and break above this previous lower high, then only I'll be looking to buy into NIO, where I could then begin to see it follow through much higher to the upside. And a couple other things that I also want to add is that once we also break above this level, technically we'll also be breaking above the neckline of our inverse head and shoulders. This is our neckline, so break above the neckline also confirms the move, as well as this ascending triangle that I talked about. Once we break above the top horizontal resistance line, that also confirms a bullish breakout to the upside. So that's why that's the key level you should be watching out for before I personally plan to be buying. From there, I could see NIO stock potentially hit this level here at about $39 a share, where we had very strong level of resistance over here. But overall, I think the next real true price target for NIO will most likely be the next lower high that we had all the way up here at about $42 a share, where we had a very strong resistance level over here. This was like basically our last peak before this level. So I think once we break out, we could probably see a push up, maybe face some resistance here at 39, but overall then push up here all the way to about $42 a share. In fact, if I actually place in the Fibonacci retracement from our swing high all the way down to our swing low, what we can see is that that $42 level also happens to be our Fibonacci level, our 61% Fibonacci level. We can see right over here where this blue line is. So you can very easily push up to there after hitting this $39 level. But overall, then from there, it makes it much more likely that we see a 50% retracement, because our 50% retracement, as we know, is like our midpoint. It's our make or break level. We have our 0, we have our 50, we have our 100. So it's the midpoint, and it falls at about $44 a share. So it's very common for us to see a retracement up here before major resistance. But overall, those are the key levels to watch, and I think my short-term price target within the next few months, if we see continuous bullish strength and we see a return of positive news, is we could easily see this 50% retracement all the way up here to $44 a share. So that's my price target for now, and the way again I plan to be trading it is buying into each break above these previous lower highs. So once we break above here, I'll be taking a small position. Once we break above this level here at 42, add even more. And once we reach this 50% retracement, if we can break above this, then it makes it a lot easier that we see a full retracement all the way up here to $55 a share and all-time highs. But now let's talk about what happens if NIO stock ends up dropping, because like I mentioned, anything can happen, guys, and the whole point of technical analysis and trading in the markets is so that you can profit regardless of whichever way the stock goes, and that's how you always win. So if NEO stock ends up dropping lower, I think certainly we find support here, down here at about 34.70, where we recently had a strong level of support. Now, if we break below that, definitely we'll find some support level here at about $33 a share, where we just recently bottomed. But overall, I think the major base that we do find is all the way here at about 31.50, where we had our big pivot point over here, and over here where we came down, had our pivot point at about 31.50 before our big reversal to the upside. So with that being said, guys, that's the video. If you enjoyed this in-depth technical breakdown, be sure to leave a like and subscribe. And if you want to learn technical analysis for yourself and a ton of advanced trading strategies, be sure to go get my new book, A Technical Trader's Handbook, on Amazon. And with that being said, I'll see you guys in the next one.